Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and this is a little bit of we're gonna jump into. Actually, hold on one sec. Let me clean this up. Actually, kind of lifted and shifted this morning. Long story short, Taylor and Jeff weren't able to make it. They had a couple of appointments that they needed to get to, but I wanted to go live because there is a bunch going on today, and markets are, let's see here. Where the hell? There we go. But like, there's a lot going on in the news and the markets today. So I want to make sure that we touch on it. So let's go to the chat, see who we got here. J Utah MB. Afternoon, brother. So, if you're not watching on YouTube, if you want to join the conversation, join the chat, make sure that you pop on over to YouTube, DeFi Crypto and Airdrops, and join us there. I love answering questions. So if you have any questions about DeFi, crypto, anything like that, make sure that you jump in there. You can also, in the description of the episode and in the description of the channel, you can join the DIG Discord or the Discover Investment Group or our DCA Discord. And actually, let me go back to here real quick. I want to make sure that I touch on this. So if you're interested, we have a family of channels. These are our brother channels. If you're interested in macro news, economic news and crypto news, Discover Crypto is every morning, Monday through Friday at Pacific time, 7:30 in the morning. Blockchain Report is my co-host Jeff, and he does a airdrop specific content on the Blockchain Report. And Drew and Isaac over on Blockchain Basement, they do a lot of macro, economic, and just kind of world news, just so you can keep your finger on the pulse of what's going on and what's driving markets. So if you if any of that interests you, I highly suggest you go over there and give them a follow. So let's go ahead and jump on into it. So here's a post from Discover Crypto where they are talking about Swift. So those of you that don't maybe aren't huge into crypto or anything like that, a big use case that has been driving crypto technology or blockchain technology is movement of real world assets and liquidity. So money. Doing cross-border payments. Well, let's go this way. Doing cross-border payments. Things like that. So XRP. Ripple and XRP and the XRPL, the XRP ledger, is one of those that has been going after that use case. But Swift is who has been doing it forever. They're the one. It's a messaging system, archaic as shit, slow as shit, expensive as shit. It's just shit. But they are looks like they're upgrading. So the Swift CEO is posting, and they've announced that they are working with Chainlink, and they are going to upgrade their system using blockchain technology. So they are fixing the issues. So let's go ahead and jump into this real quick. So this is, I'm not even going to try to say his last name. This is Tom. He's the CIO, the Chief Innovation Officer at Swift. So we received a lot of feedback on X and LinkedIn lately. Let's just say many of the DeFi community are passionate, but often miss some very fundamental things about how finance actually works. What's required to use public blockchains like Ethereum at scale. Some of my direct messages response even start with lines like, "That is one opinion. It would be helpful if you could share views without the insults and sarcasm. They don't add much to the conversation. You come across uninformed and childish." Yes, I really send that sometimes. Here's the serious point. Neutrality. In finance, it's about how many nodes you run or whether the code base is open source. It's about governance, legal enforceability, so legal compliance, That is what I'm always talking about, and why I'm so bullish on projects like Plume. Being able to stay compliant without taking the whole system down is going to be necessary. You're not going to be able to not to have a project that can't be upgraded. It's going to have to, as regulation changes, it's going to have to be modular. The technology is going to need to be upgradable. So anyway, um, legal enforceability and ensuring no single participant can tilt the outcomes in their favor. So it needs to be immutable. Basically it needs to be secure. Swift doesn't issue assets. It doesn't compete with members, and it is structured as a cooperative with 11,000 plus institutions. They already have the partnerships. They already have people that are integrated into them. They don't need to go around and pitch their product. Everyone's already using it. About the only people that are pushing back against it is the BRICS nations, because they don't like that Swift is used to enforce U.S. policy. So, the U.S. using the U.S. dollar and Swift, they can basically cut off countries from, from the financial system. They did it with Russia when Russia went into Ukraine. They do it with Iran. They do it with North Korea. All of the countries that are part of BRICS. People are sick of the U.S. government using the financial system as an economic warfare, basically. Hey, what's up, Kyle Watts? Good to see you, man. So, um, public chains like Ethereum absolutely have a role by providing programmability, transparency, and settlement innovation, which are essential. But neutrality in global markets only works when you combine open infrastructure with trusted governance, regulatory alignment, and dispute resolution. Code alone doesn't settle billion-dollar disputes. That is why the future isn't Swift or Ethereum, it's both. And IT's multiple chain. Institutions need the trust scaffolding Swift provides, and the innovation open public infrastructure, including blockchains, enables. Together, they can deliver the scale, neutrality, and resilience that global finance actually requires. Swift is working with Chainlink. People can kick and scream about it. But again, Swift has the partnerships. People are already integrated with them. If they can somehow upgrade their system with something like Chainlink without disrupting that system, they have it on lock. It doesn't matter how bullish you are on XRP. It doesn't matter how bullish you are on Key or Kita or anybody that's going after that market, the cross-border remittances market. I'm very bullish on some of those projects. But some of those other projects, like Kita, for example, and we'll talk about it here in a minute, aren't just going after cross-border payments because they didn't, they didn't, laser focus on that one use case. We'll be talking about how Kita is potentially going to be launching with Visa and, and doing, managing Visa's payments. So we'll get into that. So let's take a look. Everybody in the markets right now is very beat down, and rightfully so. That's kind of the reason why I did the thumbnail. Hey, what's up, Granny's Garden? Good to see you. Everyone's beat down. I get it. It's hard to stay bullish. It's hard to stay positive when you see the value of your portfolio constantly getting beat up. When you constantly see red. I sometimes catch myself doing it. However, anytime I feel myself getting into that headspace, I always go back to the data. I'll pull up the news. I'll look at, who is partnering with who. I'll look at who's building. I'll look at the TVL that's going into DeFi. I'll look at the TVL that's going into stable coins, the TVL that's going into RWAs, the data. The data is where I feel safe. If I just looked at price, I probably would have gotten butted out of the market long ago. Because looking at price, you're like, holy shit. Especially if you were here since last bull market. I got in at the end of it. All through the bear market, I was stacking. And the whole thing that kept me going was when the bull market comes, my bags are going to pump, I can cash out, and life's going to be great. So far this bull run, yeah, I've made some money, but I have not made life-changing money. I've made some really good money in DeFi. I've definitely built up my bags, but it's not enough money to where, I'm just gonna, cash out and just live the rest of my life and, on an island or on a yacht. I haven't gotten that kind of money yet. So my safe haven, my safe place, my place of peace is data. Because if you look at this is DeFi. This is the total market cap of DeFi. Since 2023, 2024, we have just been up and to the right, and it's just catching momentum. It's just getting steeper and steeper. Now, let's look at USD inflows. We have, a lot more inflows than outflows. So that's positive. Let's check total market cap. Same thing. Token market caps. What do we got here? USDT is on the upswing. USDC is on the upswing. And then of course, you got a bunch of other, stable coins and stuff like that are definitely nowhere near the market cap of USDT and USDC. But you can see everything so far is up and to the right. Oh yeah, no, I am a YZY millionaire though. I could probably share that. I actually have like $1.2 million in, I can't cash it out. There's no liquidity, but I have like $1.2 million in YZY coin. But I won't lie, it's nice to open my wallet and see like 1.3 $1.4 million as far as my total. So yeah, that was definitely whenever I need a pick me up, I can do that. Um, let's see what else we got. So yeah, no, in the past 7 days, not a ton, but a 2% upswing. Total market cap, yeah, but just steady building. Nothing too much more to say about that. Let's look at RWA.XYZ. So we're up 8% in the past 30 days. Again, up and to the right. This is tokenized real world assets. Today, Ondo went live. They tokenized stocks on the New York Stock Exchange. This isn't a fad. This is being adopted. If you aren't looking at the fundamentals of these projects and the news that's going out there, you're going to get fudded out of these markets. This is not the time to give up. This is the time to buckle up. Don't focus on the prices. Focus on the fundamentals of the projects you are invested in. Me personally, I'm in RWAs and DeFi because I see the writing on the wall. I am focused on the data for those use cases. Sure, you can make money in, gaming and, a lot of other narratives. For me, I see what big money is doing. If big money is investing in something, it has a future. They do not invest in things that don't have a future. They have a fiduciary obligation to their investors to make a profit. Because of regulation, they are not allowed to invest in certain things. So within the limitations that they have to make sure that they are getting into things that are compliant and that are profitable. And they are aping into DeFi and RWAs. They are tokenizing everything to make it more liquid, more tradable, so they can move value easier. They can fractionalize, I mean, basically, what stocks do to a company. This is the new stock where you can tokenize anything. You can tokenize real estate and fractionalize it. I can buy an apartment complex, tokenize it, and somebody can buy $100 worth. They can buy $1 million worth of the tokens, and based off of the amount that they buy, whatever profit that apartment building makes, I can pay dividends. It's a whole new world. They see the writing on the wall. And if you're paying attention to what they're doing, you're bullish. If you're paying attention to the prices and you're emotional, you're going to sell. You're going to get fudded out of your bags, and you're going to be one of those that sold their Amazon stock, back in the late 1900s, early 2000s. It feels weird to say that 1900s, but you you just have to stay disciplined and you have to stay focused. I haven't seen any updates on Almanac, Stan. Not yet, anyway. Hey, what's up, Deadwood? Good to see you, brother. All right, so let's move on. I got a lot of news to get through here. All right, we'll share that, but I'm gonna rattle through some of the topics that I found in the news today. So the SEC revamps crypto regulations. The U.S. Securities and Exchange Commission, or the SEC, has unveiled a new rulemaking agenda aimed at overhauling crypto regulations and easing Wall Street rules, perceived as overly burdensome. This move signals a potential shift toward a more crypto-friendly policies in the U.S. Bitcoin and Ethereum market movements. Bitcoin is stabilizing around 112,000, while Ethereum has briefly surpassed 4,400. However, traders are bracing for a potential September slump. Historically, a weak month for crypto, with Bitcoin averaging a 3.7% decline since 2013. Despite this, institutional inflows and regulatory clarity from the Clarity Act may mitigate downturns. That is important. So historically, past cycles has been, like I was talking about before, has been entirely retail. It has not included institutional money or big money because legally, because of regulation, they were not allowed. The SEC was very hostile towards anything crypto with the last administration. Those of you that were around, Gary Gensler, Elizabeth Warren, Gary Gensler, the head of the SEC, they were very, very aggressive and went after anything crypto because the banks, their handlers, it's the way it works. Big money influences politics. During elections, politicians pander to those that elect them. As soon as elections are over, they do the bidding of their masters. It's just how it works. I hate it, you hate it, but it's the way it is. So, this administration, however, is very crypto friendly because Trump and the Trump family, they were attacked. They were debanked. They were cut off from their bank accounts. And so they saw the potential for crypto and they got into DeFi and crypto because it was a way that they could ensure that they couldn't be cut off from their assets, from their funds. They are a lot friendlier. Love him or hate him. Like I said, politics, you need to take your emotions out of your investing. Even if you hate Trump, you need to remove that from your investing. If you don't, you are going to miss opportunities and you're going to get wrecked. I catch myself doing it all the time. I get very emotional about certain things. But because of discipline, because I force myself to stay unemotional. I will not make a decision on my investments if I feel I am emotional in any way. If I feel anxious because markets are crashing, or I feel anxious because of something that's going on, in politics, I step back. I will not allow myself to buy or sell anything until I can calm myself. All right. Let's see what we got. Jay, dude, my kids say I was born in the 1900 and fucks me up. Yeah. Yep. Yep. Back in the 1900s, back in them days, back before the interwebs. Yeah. Yeah. Looks like JUT does, his kid does the same thing. Yeah, no, yeah, for sure, Jeff. My lighting work is looking better. It's not so sunny. I'm not looking so like jaundice. I'm not looking so yellow. Black finally moved, huh? Let's take a look. Let's see where we at here. Oh shit! Yeah. All right, let's pull this up real quick. So those of us that have been stacking black are doing a little bit better. Not a huge move. I mean, it's 12%. But definitely on the upswing. I've been saying, black has been doing something that very similar to what happened to Aerodrome. Aerodrome pumped big, took a big dump, from like $2.20 all the way down to like in the 30-cent range, and then we've been climbing out of that hole. It's I definitely see the potential, not a guarantee, but I see the potential for black doing that. It's why I've been building a decent sized position in black. Um, I started with $800, and I'm up to about $1,600 now. So I've doubled my money, and with this pump, it might even be better. I haven't looked, but um, it's why it's important to have discipline. If I was just watching the price, on black dump from what was it, like a dollar something? Let's see. Yeah, when it came out, it got up to like $1.50, and it's just down into the 20-cent range. We got a little bit of a recovery, but honestly, I still think that we need to get back above this kind of launch point, which kind of looks like it's I don't know if this is like a point of control or what that is. I'm not a chart guy, but we got a long way to go. However, I'm stacking black for free, mind you, because I'm in a full range USDC black position, making like 300%. In fact, I'll pull it up. Let's pull up my VFAT. But this is why I stay disciplined. I stay stoic. I don't allow myself to get emotional because, like with Plume's price, if you just looked at price, Plume is boring as shit. But if you're watching the fundamentals and what they're building and the onboarding, and we have some news coming up that I'm going to touch on for Plume, then I'm bullish as shit on Plume still. But yeah, I'm making 300% right now. And with black pumping, that might go up. So I got about $1,500 right now. If I add this $22, I have about $1,500 in black right now. So I'm just going to sit here and let this grow. Why not? I mean, I started it with $800 of yield that I harvested off of, other pools that I'm in. So it's free money, it's OPM, other people's money. Plus, I've made an additional $700 of OPM. So this whole $1,500 is other people's. I'm not emotional at all with that money. It cost me nothing. That's all earned money. The beauty of DeFi. This wrapped ETH arrow, it's only making 60%, but it's just ticking, just growing that bag. So not worried about that one either. All right, let's go back to here. What? Yeah, no, definitely signs of life, Jay. I'll definitely take it. The RSI did a nice move on the higher time frame. I'll take your word for it. And very good point, Jay. You know, that 1600 is going to be juicy. So, you know, let's just say that, what was it? We're at about, we'll say 30 cents. 30 cents up to a buck 50. So we'll say what, a 3, 4, we'll say like, we'll just say a 5x just for shits and giggles. So 1500 times 5, you know, that's 7 grand. Did I do my math right? Sorry. I'm not a math whiz. I know I should be able to do that in my head. Yeah, $7,500. So yeah, if we just go back to, you know, the $1.50 that we went back to, or that we've been at before with black, I'll have $7,500 of black, you know, plus whatever I build up between now and then. That's how I built my plume bag. You know, that's how I built my Mammo bag. That's how I built my Arrow bag. That's how I built my KTA bag. Almost all of them. I started with a small amount of money. I used DeFi to grow them, you know, to make them grow themselves. If it's a good project and fundamentally strong, it's a great strategy for building bags using other people's money. And it's not predatory. It's not like a meme coin that I rugged somebody or something like that. It's you know, just it's lots and lots of people, in this case, swapping between USDC and black, or from black to USDC, and I'm providing liquidity. They pay a small fee, which is fully transparent. They see what they have to pay, and just 24/7, 365, I'm generating, you know, more black. So yeah, I mean, I can't stress it enough as a strategy. Let's see what we got. What up, Wispy? All right, let's get into some more news. Redstone buys Credora. Redstone, a DeFi platform. I was actually looking at Redstone a while back. I took some as yield on my aerodrome lock, but I guess it's a DeFi platform that's acquiring Credora, an on-chain credit rating platform backed by Coinbase Ventures, S&P, and Hashkey, signaling continued consolidation in the DeFi space. XRP price volatility. XRP is trading around $2.70 to $2.83, with whale accumulation of nearly 960 million in tokens, suggesting a potential breakout. Analysis predict a possible rise to $4 if it breaks resistance at $3.10, fueled by expectations of a Fed rate cut and an ETF approval. In my opinion, I don't think that's going to happen. And we'll get into some news on why. It's all good, Wispy. We all got stuff we got to do. Yeah, those Telegram notices, you know, letting you know what's going on with your Mammo is kind of cool. You know, you can see what you've compounded and stuff like that. So, this is some of the news that I'm talking about. So, Coinbase dumping XRP. Data from XRP scan shows Coinbase slashed its XRP stash from 780 million to 199 million in just weeks. So basically 70% of their XRP they sold. Ripple has been moving massive amounts of XRP. So once the 5th largest holder, Coinbase is now 10th. Institutional outflows look to be driving the plunge. So institutions are selling as well. You know, do with that as you will. Me personally, whenever I see big money, you know, doing something like this and multiple different entities, I pay attention. Don't kill the messenger. All right, just in. Trump's executive director, Bo Hines, says the crypto industry will probably go to $15 to $20 trillion after stablecoin legislation becomes law. This already happened. This was June 3rd or July 3rd, excuse me. This already happened. So we have that legislation, the Genius Act. Trump signed it into law. Another bullish indicator. That legislation, amongst other things, required that compliant stablecoins be backed 1-to-1 with the US dollar or US dollar equivalent, like a US Treasury. So, only certain stablecoins. There's a lot of stablecoins that don't meet that regulatory requirement. USDC is one that is. USDT, however, is questionable. They are not very transparent with their treasury, with what backs, whenever they mint USDT. They have a long history of not being very transparent about their backing of USDT. That could be a bearish thing because there is a lot of the crypto market that is propped up on USDT. It's why I personally lean towards USDC. It's not as widely used. The market cap of USDC isn't as big as USDT. However, again, depending on what is actually backing USDT, it potentially could be a bubble because they just are making claims that they have assets to back when they mint USDT. Do they or don't they? I don't know. Buying XRP is like depositing money into Ripple's bank account. I tend to agree. I had 40,000 XRP. I've said this a million times. I sold it all when I saw what was going on. When I saw that, Trump coming into office, they were talking about stablecoin legislation. RLUSD and USDC being added to the XRP ledger. All of these different things fundamentally changed because I was super bullish. It was my largest holding, 40,000 XRP that I was buying in the 30-cent range. When it pumped and it hit $2, I sold it. I sold my HBAR, I sold my XRP, I sold my XLM, I sold my Algo, all those ISO coins that I was stacking all through the bear market. I sold them all. Made a great profit. And you know what? That's great. I mean, and if people want to still hold those and they're bullish on them, that's great. I hope you make a bunch of money. However, with XRP, I saw the writing on the wall. I can go on Coinbase right now. I can buy with fiat. I can buy USDC, no fees, 100% free on Coinbase. I can then send that USDC to anyone, anywhere in the world for free. And they can swap it into whatever they want, into whatever fiat they want, whatever digital asset they want. They can buy an NFT with it. They can buy a tokenized asset now. The New York Stock Exchange has tokenized. A lot of blue chips are being added to the stock exchange. There's no need for XRP to move value. Cross-border payments. Stablecoins can do it. There's other projects out there that can do it that have the regulatory compliance built in. KTA is about to go live. Their mainnet is about to go live. They can do cross-border payments. They are KYC compliant. They're AML, anti-money laundering compliant, and they're modular. It's a DAG. So they can upgrade as regulation changes. They can have different regulatory compliance for different jurisdictions. So for payments to be sent from, say, the UK to the US, they can have specific rules for those transactions. If you want to send from India to Russia, they can have a totally different set of regulatory compliance for that transaction. That is not something that the XRP ledger that I've seen can do, because it's old tech. So anyway, my 2 cents. Crypto is ready for an institutional wave. This is August 14th. The last 10 years of crypto growth were all retail. This is what I've consistently been saying. We are in uncharted waters in this bull cycle, in the 4-year cycle. Now, the institutional wave has begun. It's here. We're seeing a ton of manipulation. It's not all up and to the right. There is a lot of manipulation going on right now because big money can manipulate a $3 trillion market a lot easier than retail can. Retail was manipulating the market last time, the last cycles. Now we have the big boys playing. But they are bullish, but this is the next level. People wanted the liquidity. We're going to get the liquidity. We're going to get, the money flowing into this market. However, you can, Josh, over on Discover Crypto, he calls it the windshield wiper method. He trades off that heat map and does very well because he watches the longs and the shorts stack up on Bitcoin, and he just watches the market makers and the institutions dump that liquid, the longs, and then they'll over and over and over. And the whole time, they're just stacking their bags. It's why I don't trade, because they have millions and millions, if not billions of dollars in teams and people much smarter than me that move these markets. And they're just going to take my money. I got into DeFi because I can still make money there. I can provide liquidity. And again, while I sleep, while I do chores, if I want to go swimming down at the waterfall, whatever I want to do, I'm making money. So I don't know. DeFi is, I can't stress it enough. I mean, has been a safe haven for me and many in our community. Let's see. The DeFi investor, great person. I don't know if it's a guy or a girl, but they great content that they post. I'd give them a follow if I was you. Patience is a skill that you must master. Discipline, patience, stoicism, whatever you want to call it. It's easy to be bullish when everything pumps, but can you stay sane when the market goes down or barely moves for months? All through the bear market. Are you able to stay focused? Are you able to stick to your plan? And this is why I'm always stressing, in our Discord, I'm always stressing that you need to understand your risk tolerance and your financial goals, your start point, and where you're trying to get. That's, because with that, you can plot out a roadmap, milestones of, kind of smaller steps towards your end goal so that you have something to look at so you can feel like you're making progress. Because no matter how stoic you are or how disciplined you are, you still need to feel like you're making progress. It's human nature. If you just have a goal of, I want to make $1 million, and you just see your portfolio going up and down all the time, you can get discouraged. But if you're like, I want to make $1 million, and you have milestones in between of, say, Bitcoin. I want to get to where I have 1 Bitcoin. And then I want to get to where I have 2 Bitcoin. And then I want to get to where I have 4 Bitcoin. And then I want to get to where I have 8 Bitcoin. And you have these milestones in there, then you can short-term focus on a smaller step and get that little endorphin rush of accomplishing that milestone of getting 1 Bitcoin. Once you get that, tick, I made it. I made it to that milestone. Now I need to work on 2 Bitcoin. And so you focus on that short-term goal until you make that. And then you get that next endorphin rush. I mean, that is just how we're wired. You need to give yourself those endorphin rushes of accomplishment. Yeah, with possible rate cuts this month, then potentially there could be a lot of upside to the markets. So, yeah. Pay me and I'll go, oh shit, I'm broke. This exit, let's see. As they exit XRP, any data on where they are going as a replacement? That's actually a really good question. Maybe we should look into that, see where that liquidity is flowing to. My bet would probably be Ethereum. That would be my bet. So SEC clears path for crypto ETFs. Ondo ETF by 21 shares coming soon, possibly. The SEC and CFTC joint staff statement. So if you don't know, the SEC is the Security and Exchange Commission. The CFTC is basically anything that the SEC doesn't have oversight on. The CFTC does. So the SEC is for securities, and the CFTC is for everything else. So basically, they're meeting together, about this topic. Let's see. What else we got here? This is bullish for Kita. So Ty is the founder of Kita. So I want to reaffirm Kita's unwavering commitment to building long-term value and ensuring complete transparency in how we steward the network's resources. Got to drink some tea. A core part of this is commitment to the responsible management of token allocations that shape the foundation of our ecosystem. Kita the company, has decided to merge the early investors and the team allocations into a new category called strategic reserves, totaling 400 million KTA. To align with Kita Network's long-term vision, these tokens are dedicated to Kita's future and are not intended for public sale. Did you hear that? As part of this commitment, the first 8.4 million unlocked tokens from the strategic reserves, so their tokenomics, they had unlocks. And as they unlocked, potentially they could sell those. But what they're saying is the first 8.4 million unlocked tokens from the strategic reserve are now securely held at this wallet address. You can go and look it up. These tokens will remain in this wallet until a permanent long-term holding mechanism is implemented, which will allow the full 400 million KTA to participate actively in mainnet voting. That means locking. This milestone underscores a simple but powerful principle. The strategic reserves are not a source of sell pressure. Every token within the 400 million KTA covered by this category will be held in a long-term manner, fully aligned with the project's vision and the best interests of the community. For transparency, Kita also operates two key wallets that will remain active in supporting the project. The Treasury wallet, they give the address, full transparency. I love this. And the Foundation wallet, again, wallet address. You can look it up for yourself. Will continue to be used for project operations, growth, and ecosystem support. So, airdrops, things like that. I love this. Kita is very, very impressive with their transparency. I love how they're always making sure that before they do things, that they announce them. This generates a lot of trust. Let's see what we got here. Can't wait to be done with this and DeFi in the bear market. Absolutely. Everyone that listens knows my strategy. I am between $400,000 and $500,000. I don't care if we're in an extended market or a super cycle or whatever. I'm looking to 10x my portfolio from what I started with. And I actually only need about a 7 or an 8x from here. But I want $400,000 to $500,000 because I know that I can make 10 to 20% in DeFi. That's $50,000 to $100,000 in additional income that I can use without touching the principal, just using OPM. Again, my mantra, OPM, other people's money. Just the yield that I earn off that $400,000 or $500,000, I can use to build a whole nother higher risk DeFi portfolio. So if I'm not touching that principal and I can make a steady 10 to 20% on it, and we'll say 20%, and I make $100,000 a year off of it, that's $100,000 a year that I can put into projects like Kita, into assets like Bitcoin, Ethereum, whatever. And I can use those to take out loans against. I can use those to earn yield as well in liquidity pools and lending, for 30, 40, 50, 60% or more. And just add to that $100,000 a year and rinse and repeat. Some of it, certain percentages, I have certain strategies already built out where like 30% goes into my treasury to build, on that 400,000 or 500,000. 30% I cash out to have fun with, to improve the property, whatever. Another 30% goes into opening new liquidity pools. And then, maybe 10% is just dry powder. I just let that stack in stables that I use for dry powder when I see a project that I like. There's a lot of things that you can do in DeFi, but you need to put pen to paper. You need to put fingers to keyboard. In our Discord community, I've put my tracking sheet that I use that tracks my, my HODL bags. It tracks my DeFi positions. It tracks my ladder out strategy. It tracks my my black hole locks and my aerodrome locks. I have everything in there, and I have built out my ladder out strategy. It's the only way to keep yourself honest, but the only way that you're going to be successful is to build out your strategy now before you're emotional. If these markets do ever pump, it's going to happen to the best of us. We're going to get excited. We're going to be taking those screenshots and sending them out to friends and family. Look, I have $100,000. Look, I have $1 million, and you're going to ride a little too long. And hopefully, if that happens to you, maybe when you'll get out and be in profit. But if you're one of those that holds on a little too long, you could round trip your bags. You could end up with less money than you started with. Because people like me that are disciplined and have our plan, no matter what the markets do, I'm going to be selling my bags. I'm going to be selling, my Kate, anything that's not in a lock or that I have set aside. I have 10% of certain assets that I'm going to round trip, just in case. But 90% or 100% of some bags, I'm selling all of it. No exception. And I have an exact price point and an exact percentage of my bag that I'm going to sell at each of those price points. As soon as those are hit, I don't care where we're at in the market. I don't care if that asset alone pumped. I'm selling. That's it. No, it's not a debate. It's not like a little, I'm going to hold a little bit longer. None of that. I'm selling. And that's how I'm going to ensure that I'm profitable. All right. Yeah, it looks like Wispy's been saying the same thing. Ready to just DeFi. So Ricky, yes, potentially DeFi can be more beneficial during the bear market, especially with institutional money getting into DeFi. It's in past cycles, it's just been retail. So it's pretty much if the volumes aren't there, if retail isn't swapping, things like that, the APRs go way down. However, because institutional money is getting into DeFi, there's going to be a lot of volume, a lot of money moving. So, it could be. Also, if we lose volatility to where we, can set narrower ranges in liquidity pools, and it's just trending sideways like Plume has been doing, you can get higher APRs that way. Wider the range, the lower the APR. The narrower the range you provide liquidity, the higher the APR. So yes, potentially there is, it's more beneficial in the bear market, depending on your strategy. I'm out of alts this year, no matter what. I'm definitely going to be reallocating. I'm fully in alts right now. I'd have no Bitcoin. And I kick myself a little bit because I'd be, up a lot more right now if I just would have bought Bitcoin through the bear market, at $16,000, $17,000, $18,000. If I just would have been DCAing into that, I'd have a lot more right now. So I missed that boat, I'll admit. But I'm not going to miss alts. I'm in good, solid alts. And when they pump, I hope I'll make more than I would have made with Bitcoin. And again, I'll be in stables. As I'm making that $50,000 to $100,000 a year, hopefully, off of those stables and yield, I will be DCAing. Part of my strategy is I will be buying Bitcoin. And I probably will never sell it. I'll take out loans against it, to get into, to do different things with, as long as it earns, as long as it earns, because there's not a ton to make off of lending Bitcoin, but being able to take out a loan. So I keep my Bitcoin, take out a low leverage loan on it, like maybe 20, 30%. So if I have $100,000, I can take $20,000, $30,000 loan out on it, which is pretty safe. And if I have stables on the side that I can, pay down the loan, I can keep from getting liquidated if for some reason Bitcoin takes a massive dump, which I don't think it will. But again, I can take that 30,000 and USDC or whatever else, put that in a liquidity pool and safely make 30, 40% maybe, and use that to pay off the loan. And then once that loan's paid off, do it again. It's just a way to leverage that Bitcoin to make money without ever having to sell it, without ever having to do anything with it. The strategies that I'm doing are super simple. I mean, I have David on and Jake, Jake Call on Wednesdays and Fridays, and they are super smart dudes with super advanced strategies. I mean, they have some awesome strategies if you want to get into super advanced stuff. I like keeping it simple, stupid. I want to learn those things so that I can, leverage those if I see an opportunity. Me personally, I don't like to overcomplicate things. If I can simply hold stables and lend them out for 10, 20%, or maybe loop, which is a simple strategy of just, lending and borrowing, and make, 20, 30, 40%, why? Why take on more risk? But that's my risk tolerance. Again, that's why I always stress for people to ask those two questions. What is your risk tolerance and what is your financial goals? If your financial goals is to get rich or die trying, yeah, take on a shit ton more risk, ape into memes, whatever. I'm old. I'm 51. Well, not old, but I'm older. I'm 51. I'm retired. I live out in the woods and I homestead, grow my own food. I'm living my dream. I'm looking to augment my income. I'm not looking to get rich. I don't care about a Lambo. I don't care about, a lot of expensive things. I want to build a shop. I want to go on some trips with my lady. Probably like the only big ticket item that I've thought about is either buying a catamaran or a Cirrus jet. So there's like a little six person jet. It's $1 million. It's no small thing. But I would love to just have my own plane even if it was just a small Cessna, that I can jump in and fly wherever I want to fly, and not have to deal with TSA and, sitting next to obnoxious people and stuff like that. So, but for the most part, 30, 40, 50%, that's huge. Every 3-4 years, you're doubling your money. I'm not greedy. That's awesome. If I have 400 or 500 grand, and even if I didn't do anything else, if I didn't rebuild a DeFi portfolio, I just earned the 10 or 20% off that. Say I earned 20%. Every 5 years, I'm doubling my money. If I'm not spending anything, of course. Every 5 years, I'm doubling my money. So I'd have $1 million in like 6-7 years, with 400 or 500,000, with spending some money. I'm outpacing inflation by far. So, I mean, that's, like I said, I mean, that's my mentality, but we all want different things. All right. What do we got in the chat here before I start out with some more news? This episode's going to go a little long. I'm getting kind of long winded. I apologize. Bitcoin and stables by November, December this year for me. I hope so. Wispy. I'll be honest. I am tired of waiting. I'm staying focused, I'm staying disciplined, I'm staying positive, but I've been at this for 4 or 5 years, and I want to see that 400 or 500 grand. I want to start taking profits. Yeah. Like those guys, I have to rewatch sometimes though to kind of get what they're saying. Yeah, I'm the same way, Ellie. It's it's a lot of the stuff that they say is above my head. And I'm doing DeFi all the time, so I don't feel bad. I mean, that's kind of why I'm here. And I've actually talked to those two about potentially doing some live events, that people can come in, fly into, and other offerings online where I'm the basic, the basics of DeFi. I'm the simple stupid. The strategies that I'm always talking about are stuff that people can learn, in a couple of days or a couple of weeks. Nothing crazy, and then they could do the medium and advanced stuff, for the people that want to take it to the next level. I'm under no illusion that I can teach, that level of strategies. It's just far too complex for me right now. Yeah, it would be such a relief to just be able to sell my bags into stables and get to work, doing the strategies that I've built out. If everybody could, if you could like and share the stream, just to get the word out there, as you all know that are in the chat, I mean, do this for free. It actually costs me money to do this. We haven't monetized at all in any way. So, this is, basically I lose money doing this. I just really wanted to have a place where, to build a community where people aren't shilling, they're not trying to, get you to, pay for some course, or, trying to get you to buy, whatever projects that they're buying so that they can, dump their tokens on you and stuff like that. There's way too much of that in this, in crypto. And so that's what me and Jeff are trying to build, with some other honest people, is just a great community and a great channel. And to do that, it's really hard to monetize, because most people that want to pay you, they want you to show their project. So if you could help us out and, like and share the stream. All right, let's see what else we got going on here. All right. I think we got through all that. So yeah, I asked Grok if Coinbase was selling XRP, and it said yes, Coinbase has significantly reduced its XRP holdings, with reports indicating 57% drop in a month and 69% plunge from the last quarterly report in 2025. This reduction from 970 million tokens to 249 million tokens across 16 wallets has sparked debate about whether it reflects a strategic sell-off due to regulatory uncertainty. All right, so that is true. So here we go with this. So this is another guy that's kind of up and coming. I might see if he wants to come on the show. Crux of Crypto. He follows me, and I just started following him. But to sum this up, Swift has been working with independent blockchains like Hedera and Ripple. Looks to be a competitor to replace Swift. There's no telling who is going to win out. Swift is not Blockbuster. They are incorporating blockchain technology, but is their legacy system too far gone to correct? If XRP pulls this off, this could be the biggest Cinderella story of modern history. Coin Bureau. On LinkedIn, Swift CIO Tom, and this is what we reported earlier, took aim at Ripple. So I do not see Ripple taking a large market share. I could see Ripple getting the BRICS nations, however. Those that don't want to use Swift and that don't want to use the US dollar for remittances, I could see them, signing up with Ripple potentially because they could come up with their own payment system like Swift, that cross-border payments. However, if they want to participate in the global economy, they're going to have to figure out a way to bridge between, Ripple's offerings and whatever Swift comes up with if something doesn't replace Swift. And it's going to have to be compliant. So again, if something like that happened to where Ripple, was taking care of BRICS and, non-US denominated asset transfer, and say Swift was doing the other one with US based and, compliant, they are not going to allow Ripple in that case to integrate into the Swift Chainlink system that they have announced that they're building unless it is fully compliant. It's just how it is. It's not FUD, it's fundamental facts. You have to stay unemotional. I see it way too much. And I'm constantly getting into back and forth. I'm sure you see it on my X, trying to get people to understand fundamental facts and logic over emotional hopium because they watch the same echo chamber of people telling them that XRP is going to $1,000 or $10,000, because it's going to replace, the financial system. And there's going to be, hundreds of trillions or quadrillions of dollars that's going to move on the XRP ledger. It's not. I'm going to go on the record. If I'm wrong, then kill me. But I just don't see it happening. It's Swift already has the partnerships. Everyone is already signed up with them. All they have to do is upgrade their system to run on blockchain. And they're doing it with Chainlink. They've already announced it. Once that launches, Ripple's whole use case is dead. So keep a close eye on this. I mean, because I could be wrong. Have a moon bag of XRP just in case. But you might want to have a little bit of Chainlink because Chainlink, and the Swift partnership could, if they pull it off, they already have the whole financial system is tied into Swift and has been for decades. Once they modernize their system to where they can do cross-border remittances and all the things that Ripple was trying to fix, because it was a huge pain point, expensive, slow. I mean, weeks. It would take a week or two if you wanted to send, a cross-border payment. Sometimes it never showed up. It was expensive as shit. It was terrible, terrible system. But that was what Ripple was trying to fix. And it was a great, and that's why I invested in it, because it is a pain point and a use case that needed to be fixed. But again, if Swift can fix this, people aren't going to jump ship. They're not going to sign up with a third party that's not part of that, cabal or that elite. It's just the way it is. Take your emotion out of it. All right, what else we got in the chat? Yeah, yeah, Cirrus or higher end Cessna, but yeah, the expenses on it is outrageous. Doing the maintenance and um, doing the just getting a hangar to keep it in, all that kind of stuff. But like I said, it's the only high tick, large ticket item that I've really looked at is a nice catamaran or a plane. And if I got the catamaran, I'd probably just do a small Cessna, just to get to it. But yeah, again, that's my one, my one thing. Let's see. Damn, bro, we are in the same boat. Been holding since 2020, and portfolio is at 170K currently. I want 500K too, and I'm good. Yeah, and that's perfect, Ricky. Is you have your financial goal. Your financial goal is locked in. That 500K, as soon as you hit that, cash the fuck out. And you met that goal. And if you DeFi that, even if you put that in traditional investments and earn 10%, it's an extra 50K a year that you can use to build another DeFi portfolio. Do other investments. Perfect. Yeah, I don't think Swift is going anywhere either. It's these banks, these institutions, if they don't have to, they don't want to reinvent the wheel. If they can upgrade, if Swift can upgrade these banks and institutions, it, they don't have to do anything. They don't have to invest anything. They're already signed up with Swift. They don't need to build out their own blockchain. They don't need to build out their own rails. They don't need to sign up with Ripple. They don't need to do anything. It's just business as usual. Yeah, that I agree, Jay. Same, that's my thought too. Is that if Ripple does handle BRICS and like Iran, North Korea, Russia, countries that that have sanctions on them that aren't allowed to use Swift, they're not going to be allowed to. Ripple won't be allowed to be connected to Swift. So it's just going to create two totally separate and isolated financial systems. Could it happen? Absolutely. Um, possibly, possibly. Repost on. Yeah, appreciate it, Jay. Yeah, Granny's Garden. It's super easy strategy. The lending. It is. I mean, obviously super simple. You lend it and you make a yield. Nothing complicated. You don't got to worry about liquidation. None of that. It's just you just lend your assets. Like if you have Bitcoin, is about the only risk is the platform. But I think as institutions are building out these platforms, they're going to have regulatory compliance. They're going to have things eventually. I'm sure because of regulation. Like the FDIC insurance that's on your bank account. Some sort of backstop for if the protocol goes down or something. They're going to have proof of reserves or non-custodial. That's my big thing right now. Is I look at protocols that are non-custodial to where they don't actually hold my assets. They just get locked into a smart contract that I hold in my wallet that I can access, like a Mamo. Mamo. I have Mamo, my Bitcoin, and my USDC that I have on Mamo is not custodied by them. I can actually, that whole site could go down. That Mamo.bot could go away. I can go over to Moonwell and I can cash out there. I can access, I can cash out, I can do everything. So that is my focus, is non-custodial platforms. And that's the reason why is just I don't want to get caught up in a Celsius, where I lose everything. Um yep, that's a ticket into a black unmarked van. All right. So that's all the chat. Let's see what else I got for news before I let y'all go. Let's see. So Drew was talking about this on the show just before I went live. This collector. So this is tokenization of trading cards. A lot of people are fading this. They're saying that this isn't that big of a deal. So what they're doing is you are buying an NFT or a digital representation of an actual physical trading card that is housed physically somewhere in a vault or a safe, and you have legal rights to it. A lot of people don't think this is a big deal. However, this is a proof of concept. And what that means is they are proving that you can tokenize a physical, real world asset, such as art, fine art, the Mona Lisa, a Van Gogh, something like that, real estate, gold and silver, anything like that, any commodity. What this is proving is that you can tokenize those, have a digital representation of those physical assets that is liquid, that you can buy, sell, trade, whatever, 24/7, 365. And if you so choose, you can exchange that for the physical item. This is huge. This also could potentially allow you to fractionalize it. So, this is something that's already being done, but in a much more roundabout way, with fine art, for example. You can There's a company out there, I forget what it's called, but basically they buy, they actually physically buy works of art and they fractionalize them. And you can invest $100, $1,000, $1,000,000 and own a part of it as an investment. And down the road, if they sell that, you get your money plus, whatever profit they made off of the sale. And so this is something that could be done with this. Real estate, I've said it over and over again. You can fractionalize an apartment complex, an office building, a house, if you're flipping houses, and you could use that to grow your business. Like, say I buy a house and I tokenize it. I allow people to buy a share. I keep 50% for myself, 50% I put out there for sale. So there's 1,000,000 tokens. I take 500,000 tokens for myself and I sell 500,000 tokens. People can buy $1 worth. They can buy, $100,000 worth, whatever. They get, if I rent that, they get a monthly yield on their investment. If I sell that, they get a percentage based off of how much of the tokens they own. If they own 10% of the tokens, then, after expenses and all that, they get 10% of the profits. You can do that with real estate now. And I can use that because I was able to sell, like, say I bought a house for $500,000. I tokenize it. I sell 50% of the tokens. I now have $250,000. I can take that $250,000 and invest it in another house that I can then tokenize and rinse and repeat. It's potentially a great way to scale your business. And it's a great way to find liquidity, investors. for that business. There is a ton of opportunities that are coming to you and me that used to only be available to, large institutions, people with money. That is the opportunity that I see in DeFi and RWAs. Proppy, yes. Proppy does do that. It really hasn't done a whole lot yet, but again, they are proving, not a use case. They just said it. What the hell? Proof of concept. They are showing proof of concept that you can tokenize real estate, and it is a successful business model. So again, I'm actually flying out next week to New York to go to the tokenization summit, the Centrifuge Tokenization Summit. I want to see if I can sit in on some of the some of the demonstrations and some of the talks, and kind of see what's coming to the tokenization market. All right, what else we got? I think that's about it. Let me know if you have any questions in the chat, but let's see what the markets are doing on our way out. It's been nothing but red lately. Fucking just holding the red. Black holes holding its gains. So we got still at 14% pump on black hole. Pump on black hole. Plume is up a little bit on the hour. DAG's up a little bit on the hour. As far as my bags, let's look at the market in general. Let's go by market cap. So Bitcoin flat, Ethereum losing some ground, World Liberty Financial. Why the hell? How does fucking what the hell are we looking at here? There we go. What the hell is this? Anyway. Yeah, World Liberty Fi struggling. I mean, it could potentially be a great entry point. I just don't see. I just don't see the risk. The benefit to taking the risk on it. One, I don't trust Trump. I'll just say it. After what he did with his meme coin and his wife did with her meme coin, I just don't trust him. I mean, they just suck liquidity out of the market. And I know it's a DeFi play, an RWA play. There's just better projects. Plume. It has all the ends. It has USD1, which is the World Liberty Fi stablecoin, is on Plume. Actually, you know what? I don't think I ever got to that. Let's see. I had some Plume news. Oh, here we go. So, yeah, Jeremy Allaire, another blockchain network expansion with USDC and CCTP coming to Plume Network, aiming at growth in the RWA tokenization. So, Circle actually posted this. Native USDC and I'm not following them. All right. And CCTP version 2 are coming soon to Plume Network. We're bringing the world's largest regulated stablecoin and seamless cross-chain transfers to Plume's Layer 2 blockchain designed for real-world assets. What native USDC brings? Regulated, fully reserved, and redeemable one-for-one US dollars. Plume's stablecoin, PUSD, is fully backed one-to-one with USDC. So it's fully compliant with the Genius Act. institutional on and off ramps via Circle Mint. This is just another huge integration for Plume. The ecosystem for Plume is massive. Again, why I'm not watching the price, I'm watching what is being built, the fundamentals. Trusted digital dollars for tokenized real world asset and DeFi financial apps. What CCTP unlocks? Frictionless USDC transfers between Plume and supported blockchains. Secure infrastructure for cross-chain apps with fast, efficient liquidity routing. This is just another huge bullish indicator for Plume. If you're looking at the price, you probably got fudded out of Plume already. I mean, it's done nothing but trend sideways and go down. Me personally, I see what's being built, and I am just stacking Plume, using liquidity pools. I try to make sure that the only thing that I would caution is that you do DeFi plays with your bags at this point where you're not going to lose exposure to the asset. That's just what I'm doing. That's why I like lending and staking right now. Even if you're only earning 5 or 10%, you're just steady stacking your bags. And if price takes off in an instant, if everything just goes straight parabolic, you're getting full price appreciation on your bags and any of that asset that you have earned. So you don't have to worry about missing out. If you're in a liquidity pool and prices start to pump, potentially you are going to be left behind. If you're sleeping and you're in a USDC Plume or USDC Ondo or USDC ETH, you are going to be DCA'd out of your assets into USDC. And you're going to be stuck holding stables at a much lower valuation. You need to understand how these liquidity pools work. Do not get stuck with your whole bag in a USDC, a stable coin, a crypto pair, when you're potentially sitting on a parabolic pump. It's just not a good place to be. So anyway, I guess I can just end it with that. Let me know if you have any questions. I'll take a drink real quick. If any questions come up, I'll answer those. If not, I'll end it. Going once. Going Twiz Ice. All right. Well, stay stoic. Stay unemotional. If you got to, go for a walk. Do whatever it is you got to do. But if you've done your research and you're confident in your bags, hold what you got. It's like being in a storm on a boat. Just stay the course. The seas are rough. Just batten down and ride it out. When it comes to your DeFi positions, make sure, like I said, that you keep in mind the potential that these markets go volatile very quickly, up or down. So make sure that you're cognizant of that. And last but not least, make sure that you join our Discord for free. It's a free Discord. The download, my tracking sheet that I'm always showing, I'll show it real quick. So this is the tracking sheet. It shows my DeFi portfolio, my HODL bags, my DeFi or my bull run portfolio. It has my tracker. It's all these blue shaded areas. I've already done the formulas for you. All you got to do is put your assets in. You might have to tweak these a little bit, to put the ticker, for your assets. Like here, like say I wanted to change, this one from Arrow to Casper. I would just change this AERO up here in the formula to CSPR. That's the ticker for Casper. And it would change, to whatever the current price of that asset is. But based off how many tokens you have and what the current price is. It will tell you the current value. You can put in, hey, this is my price target. This is what I'd like to sell my bet. Make sure that I'm all out, and potentially what you'd have, if you sold all of them at that price point. However, I suggest, this is, some of my liquidity pool positions. Again, these auto populate based off of the current value and the APR that I'm earning. And then it will tell you, this is how much you're making per day, per month, per year, based off your yield that you're earning. Again, all of this is manual. I'm trying to figure out a way to make it automated, but not there yet. But ladder out. This is the one I highly suggest you do. It's just, this is a must. Build out your ladder out strategy. For me, like with my Casper, I'm selling 15% of my bag at 10 cents. That's 67,653 tokens. At 10 cents, that will be worth $6,765. Doesn't matter. I don't care where we're at in the markets. I don't care what the narrative is. I don't care if everyone and all the experts are saying we're just up and to the right forever. I am laddering out. My goal, if I hit all of my take profit points, I will have $517,000, well above what it is that I'm trying to get out with. If I fall short and I only hit 500,000 or 450,000 or 400,000, that is still within my goal. Because again, anywhere between $400,000 and $500,000, I can earn 10 to 20% very conservatively and do very well, and get a nice extra income stream that I can do to continue investing, to lever up my risk so I can earn 40, 50, 60, 70% or more without touching that 400 or 500,000. This is key to your success. If you do not have a plan, you are going to be somebody else's exit liquidity. So with that, again, go on over, download this, fill it out with your information. It's free. It's going to do nothing but help you to stay on track and to follow your roadmap to get to your financial goal. With that, make sure you like and share the stream. Until next time, Veteran Crypto out.